Could the United States eliminate the income tax? That is what we are going to be talking about today. There has been some chatter with the new Trump administration coming in that this is something that they could potentially try to do. In this video, we're going to look at the United States tax revenue. We're going to look at the United States expenses, go through the numbers a bit, and see if this is something that is actually feasible. Before I do get into it, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code for a $3 lightning tip down below. If you want to support the channel, feel free to send me a little lightning tip. I'd appreciate it. Now let's get into it. The income tax makes up about half of the United States revenue. In 2023, the United States collected $2.24 trillion in income taxes. It was 49% of the revenue that year. And in 2024, the United States collected $2.43 trillion in income taxes. Let's look at a little visual here. This visual shows the U.S. tax revenue by year, and as you can see, that dark blue shaded region is the individual income taxes, and on average, it's been about 50% of the U.S. tax revenue every year. Right above it, we have the Social Security and Medicare taxes. Later in the video, we're going to talk about Social Security and Medicare spending and why there's a big problem with how much the U.S. is spending on these programs compared to how much they're collecting through taxes. And then you have some other items on here like excise taxes, estate and gift taxes, but really the main chunk of the U.S. income is from income taxes. So getting rid of income taxes is going to be tough for the United States to do. If we look at the United States, we can think about the country like a big spender. You may know someone like this. They spend a ton of money and they really spend more than they make. The US is constantly operating in a budget deficit. So every year, the US spends more money than they take in, which means that the US has to continually go into more debt, which is a big problem I've talked about a lot. The US has over $36 trillion in national debt. And because of that, the US interest expense on their debt has become very large and it's becoming unmanageable. So if you think about someone like this, they're spending a ton of money and they're spending more than they make. Cutting out half of your income is probably not going to be a good idea. So when you look at the fiscal situation that the United States is in, I don't really think you can cut out the income taxes altogether. One potential idea that has been floated around is possibly replacing the federal income tax with a federal sales tax. I personally kind of like this idea, just looking at it on the surface. And to be completely honest, it's something I think I need to look into a little bit more. But if you think about it, the income tax somewhat disincentivizes people from earning more money. The more money you make, the higher the income tax you have to pay. So as you earn more money, maybe you're earning millions of dollars every year, you start to pay around half of that in taxes, which is kind of a bummer, right? Obviously, if you're making that much money, you're going to be well off anyway, and it's probably not going to be too big of a deal, but the way the system's set up, it kind of de-incentivizes you to earn more money. Looking at the sales tax, I think that it could set up a better incentive structure for the economy. When we look at the society that we live in, it is a society that is based around consumption. We all overconsume, and I think that there are some negative consequences with this. If there was a federal sales tax rather than a federal income tax, people may be more incentivized to save and invest. And when they consume, they may choose to consume things that are going to benefit them or society in the long term. Now, you may be thinking if there is a federal sales tax, this could hurt businesses. If people aren't consuming because there's a higher tax on it, what about those businesses who are going to see less customers? And this is a potential negative, but I believe this could make people think about what they're consuming a little bit more. And if it's going to benefit them in the long term, it could help people have better time preference. And yes, some businesses may suffer from a federal sales tax, but the truth of the matter is there's a lot of businesses out there that aren't really benefiting our society, right? There's some businesses that are making people more unhealthy, making people less productive. And I think that with a federal sales tax rather than a federal income tax, it could change the incentives a little bit more towards from overconsumption towards investment. And we could see people invest more in the future rather than consuming right now and really maybe hurting society overall when it comes to the environment or our mental health or, just too much unnecessary spending out there that could have been allocated to another investment. Another negative with a federal sales tax is that it's going to lead to higher prices. Like I mentioned before, the US collects a lot in income taxes, trillions of dollars. If you're going to try to replace that with a sales tax, you're going to need to have a pretty lofty sales tax. You're going to have a pretty high one. So that's going to lead to higher prices, but on the flip side, when it comes time for people to pay their income taxes, they won't be paying them, right? So it could even out over time, but just something to think about. On the surface, it might not look great to everyone when there's a huge jump in prices. But I'd love to hear what you think about the idea of a federal sales tax. I believe this is an idea that's been floated around for a while, and I think I saw a bill to try to implement this somewhere. I forgot what it was called, but let me know if you see any potential negatives that I'm overlooking, or if you think that that could potentially be a positive thing, and if you think it's something that could change the incentives of our society as well. Now, let's take this idea of a federal sales tax and throw it out the window for a second, because it's probably something that's not going to happen. That would be a huge change in how taxes are done. So let's look at some other ways that the United States could maybe lower income taxes and supplement for those lower taxes in other ways. Now, one thing that we could see happen if income taxes are lowered is we could see it boost productivity in the United States. When there's higher taxes, that means that businesses and other entities have less money to reinvest into their business or into the economy in other ways. And when we pay taxes to the government, they try to reallocate that money to their best ability, but historically, they're not very good at doing that. I believe that the free market is way better at reallocating that money and having that money reinvested. So I think if there were lower income taxes, you'd see people reinvesting in the economy, in the free market, and it could lead to higher productivity for the country, a higher GDP. So although the tax rate is lower, you're still seeing the same amount of income or more potentially, because the country's productivity is rising and their GDP is rising. One potential negative here is this could take some time for this to really play out. So if you have lower income taxes and you don't see a jump in GDP for a couple years, for a little while, well, with the current fiscal situation where you're running these huge deficits, if you do see lower income, it's just going to lead to this deficit problem getting worse and worse. So that is one negative, is that it could take time for this lower income taxes strategy to benefit the United States, and the United States doesn't really have time to let this debt situation and this deficit situation get worse. Another idea that people have been talking about recently is the idea of tariffs. And I believe that the Trump administration has already put tariffs on a couple countries. I believe it's Canada and Mexico, and it's either a 20% tariff or a 25% tariff. If I'm wrong on that number, please let me know down in the comments. But the idea with tariffs is let's de-incentivize imports with a tax so that people are incentivized to shop locally and support the economy. If people are buying locally rather than importing from other countries, it will incentivize more production within the country and lead to a higher GDP. At the same time, with the tariff, the tax on imports, that will be another source of tax revenue. Now, tariffs can't replace income taxes, but tariffs could potentially be another catalyst to boost US production and another source of taxable revenue. If we look at this chart of US imports, you can see that US imports have been steadily rising. It looks like this chart goes from 1930 to present day. Obviously, this chart has a lot to do with inflation heading higher, but the US imported $3.84 trillion worth of goods and services in 2023. If we just do a little math experiment here, if there was a 10% average tariff on those goods and services that were imported, that would have brought in $384 billion in 2023. If there was a 20% average tariff, that would have brought in $768 billion. So that's a good chunk of tax revenue, but it's not going to replace the trillions of dollars in tax revenue that you get from income taxes. So I do think it's a good idea, and maybe the combination of lower income taxes, tariffs, and deregulation could lead to a productivity boom in the US, and that could help the US really get a lot more tax revenue. But obviously, the US spending is a huge problem, and we're gonna talk about that to wrap up the video, because really, you can make more money, but I think the key for the US is going to be to spend less. Some other things to think about with tariffs is, for one, it keeps dollars in the US. When the US is importing, which the US does a lot, it's sending dollars out of the US, and most of those dollars are not going to be taxed. If there were tariffs, it would keep more dollars in the country, and those dollars can be taxed. It could also boost US exports, and we could see more dollars brought back to the US, which means those dollars can be taxed as well. And let's go ahead and take a look at a visual of the US trade deficit. This has become a problem for the United States. The United States has become reliant on importing, and we import more than we export, and this chart is going the wrong way. We want to see the US produce more and see the US be more of an exporter. When you're importing too much, you become reliant on other countries, and it has implications for your country, right? If you're just getting everything from everywhere else, then you're not buying from local business, and those businesses suffer. So although I think it's good to import from other countries and other places, some other places are better at doing certain things, I think that the US should try to get out of this trade deficit and become more of an exporter. Before we get into US spending, let's do one little thought experiment here. Just do a little math and see how the combination of lower income taxes, tariffs, and deregulation could boost the US GDP and potentially lead to more tax revenue. Let's say that with the combination of these three items, we saw the US GDP rise to $40 trillion, just let's say hypothetically. In 2024, the US GDP was $28.83 trillion. So going from 28 trillion to 40 trillion is a pretty decent jump, but let's say it happened. Well, with the lower tax rate, typically the tax revenue for the US is around 17% of the GDP. But let's say with the lower income tax that the tax revenue came out to be around 15% of the total GDP. So if we take that $40 trillion of that boosted GDP that we could get, and we multiply it by 15%, that would come out to $6 trillion in tax revenue. And just for perspective, in 2024, the US tax revenue was $4.92 trillion. So that would be a pretty big jump if something like this were to play out. And this is going to be one of the keys to the US having a chance of getting out of deficits. I don't think it's going to happen realistically unless the US makes some big changes to their spending. But if the US could produce a lot more, then they could potentially make a lot more tax revenue. But let's get into the spending, because I think the spending is the real problem. If you had a friend and they were completely overspending, going way above your budget, would you recommend that they get a better job, or would you tell them to cut off the reckless, get rid of the reckless spending? I think the easier thing to do would be to cut spending, but it's something that is difficult to do, and it's not a very popular idea in the US. So let's get into some of the US spending statistics here. In 2023, the US spent $6.31 trillion. Of that, $905 billion was spent on interest payments. In 2024, the US spent $6.75 trillion, and of that, $1.1 trillion was spent on interest payments. So the interest on debt is becoming a huge problem, and the longer the US stays in deficits, the higher this interest on debt payment is going to get. And it's really growing into this interest on debt monster, where at this point, it may be too late. The US may not be able to get out of deficits, and this interest payment may just continue to rise. There's not much that the US can do about this interest expense. This is something that they have to pay. So let's go ahead and look at the US spending and see where the US could potentially cut costs, cut spending to get out of deficits, to give themselves a chance to fix this fiscal situation. It's going to be real tough. In this visual, you could see the US expenses for the 2024 fiscal year. And as you could see that the interest expense was 11.9% of their spending, national defense, 13.2% of their spending. And those are things that the US kind of has to pay. We know that we have this Department of Government Efficiency coming in, who's going to try to clean up spending a little bit and cut out some of the spending that we don't need. But if we look at this visual, there are two very big items, Medicare and Social Security, and these are the largest budget items for the United States. The US is spending a ton of money on these programs. Now, the problem is the US is spending way more on these programs than they collect through taxes for them. So if we look at some numbers here, in 2023, the US spent $2.9 trillion on Social Security and Medicare, while they only collected $1.66 trillion with those taxes. So that is a deficit of $1.24 trillion just for those items. For that year of 2023, the total deficit was $1.7 trillion. So $1.24 trillion of that $1.7 trillion deficit was because of the disconnect in the money spent and the money collected for Social Security and Medicare. If we look at 2024, it's more of the same story. The US spent $3.1 trillion on these programs, while the US collected $1.71 trillion. That's a deficit of $1.39 trillion for these items. The total deficit was $1.83 trillion. So when I look at the US fiscal situation, if there is an avenue out of these deficits, you're going to have to cut spending for these programs. You can't be spending over $1 trillion more on these programs compared to what you collect, right? That's just not going to work. And it makes me think that these programs are fundamentally broken. I know a lot of people have paid their dues for these programs, and a lot of people rely on these programs. They're counting on receiving those Social Security benefits and those Medicare benefits when their time comes. But if we're just doing the math here, we got to be realistic. If the US wants to fix their situation, if they want to have not see the dollar hyperinflate away as it inflates from these deficits and just having to introduce more money, then you're going to have to make a change. And this seems like the most logical change. I know it's not a popular opinion, but that's just the hard reality when you look at the breakdown of the US spending and the US revenue. Something's got to go with the spending, and if you can spend less on these programs or find a way to maybe somehow phase these programs out long term and spend less over time, then that could potentially give the US an avenue towards getting out of these deficits. But the longer you stay in the deficits, the higher the interest expense is going to get. That is an unproductive expense. And once it gets to a certain point, it may already be at that point. It's going to make it impossible for the US to get out of this national debt situation unless they try to restructure their debt in some way. Looking at Social Security, I'm not a big fan of this program, and I'll tell you why. The idea of Social Security is that it's protecting your financial security. So you're paying these taxes to the government over time, and then when you're older and you're retired, the government will pay back that money to you. You'll receive those benefits. And kind of the way it works is right now when you're paying the Social Security taxes, you are kind of paying for the older generation, right? They're getting that money that you're paying through taxes. And then when you become old, the younger generation will be paying those Social Security taxes, and you get to, receive those funds. The thing I don't like about it is we know that the dollar and other fiat currencies are inflating away. So by the time you're older and you receive this Social Security money, it is worth significantly less. It's not going to buy you as much things. So personally, I would rather just have that 12% or whatever it is that you're paying to Social Security. I would rather just keep that money myself and invest it into something that I believe in. Maybe have that money to invest in my dream business or into something like Bitcoin, which I think is the best store of value, rather than entrusting the government to keep the value and integrity of that money safe, because clearly they have not done that. So I see some negatives with Social Security, and I think by the time, looking at my situation, by the time I get to be 65 or 70 or whatever, the money that I'm receiving for Social Security is going to be worth like nothing, right? When we look at the inflation rate, it's not going to be worth anything as much as it's worth today. I would rather just have that money to invest myself. So maybe that's a controversial take. Let me know if you agree down in the comments. Would you rather be paying 12% to Social Security to get that money at a point in the future, or would you rather have the option to invest that money yourself? Because I think we can, when we entrust ourselves rather than the government, I think things work out better long term. To recap this video, let's return to the central question. Can the US eliminate income taxes? Probably not, right? When we look at the current US fiscal situation, you could potentially try to replace the income tax with a federal sales tax. I know that would probably be something that would be difficult to push through, but that's the only way that I could see you potentially fully replacing income taxes with something else and getting rid of them altogether. If you see another way, please let me know down in the comments. But I do think you could partially replace income taxes with something like tariffs. And like I mentioned, with the combination of lower income taxes and deregulation, that could really boost US productivity, which could lead to more taxes in the end, even with a lower tax rate. The key for the US is going to be to find a balance. You need to find ways to increase your revenue. It's always good if you can make more as a country, but the real key for the US is going to be to decrease spending, because the US spends a lot of money. I talked about the spending cut that I think needs to happen, but maybe the US can cut spending in some other areas to help. but you got to find a way to not spend more than you make. And that's definitely difficult with the growing interest expense. The projected budget deficit for 2025 is $1.9 trillion, according to the Congressional Budget Office. So the United States has some work to do. I'm hoping that the United States can get out of this deficit situation. I'm not sure it's going to happen, and I'm definitely not betting on the US dollar long term. I'm betting on Bitcoin, as you know that. But that's going to wrap up this video. If you didn't like and subscribe, please make sure to do that now. I really appreciate your support. Thanks for watching. I'll be back soon.